It's 9 o'clock on Friday, June 3rd. Let's go ahead and get started with the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether you're trading stocks, options, futures, forex, cryptos. You know the deal. If you're following me out there on social media, make sure you're following me and not a scammer and not getting messages from a phony. These are the handles: youtube.com/Chris Pulver. Everything else, real Chris Pulver. No underscores, no letters, no misspellings. I will not personally message you unless you message me. So I'm not reaching out, not asking, not soliciting, none of that nonsense. So please make sure if you're following me out there on social media, you're following the real me. Let's get to the markets this morning. Just looking at the news, non-farm payroll just came out at 8:30. Actual was 390K. So here is another look at it from forexfactory.com. 390,000 jobs forecasted for 325. Positive revision from 428 revised up to 436. However, we did also show a slightly soft average hourly earnings, so expected to be 0.4, came in 0.3. Unemployment rate 3.5 expected, came in 3.6, which was the same as last month. So, how does that translate into the last few minutes of currency trading? Well, we see the CAD getting stronger because we had a big day yesterday. OPEC agreed that they're going to increase production, yet the markets rallied. Oil rallied yesterday. Everything was green yesterday, by the way, like 11, I think 10 or 11 sectors finished positive. Big rally in the markets, but futures are way down this morning and looking to likely rebalance. We have like a $4 or $5 gap to the downside pre-market on the SPY. Dollar and CAD are soaring this morning. Big jumps right off the non-farm payroll. We didn't have CAD news, so I don't know. CAD is obviously moving a little bit more correlated to oil, but there's no CAD news this week as far as the job numbers. That would be next week. So let's go this week. Next week, next Friday should be CAD employment. Yep. So there's your CAD employment numbers, CPI for the U.S. on Friday. That's a monthly number on Friday the 10th. We have the Ecb refinancing rate still forecast to be 0%. I am very curious to see if and when the ECB gets off of zero. The rumor is that they'll be starting to raise interest rates by July, September, whether it's 25 basis points, 40 basis points, 75 basis points. We're going to have to see the ECB play catch up because they are not touching rates as of yet. RBA, interesting here. They raised rates not too long ago from 0.1 to 0.35. They're looking at another 35 basis points increase to 0.7 next Tuesday. So if you're wondering what this all means for currency traders, cbrates.com, nice way to stay up to date with what the latest and greatest is from these central banks. So Australia raised rates 25 basis points from 0.1 to 0.35. That was back May 3rd. We have Canada raised rates this week on Wednesday to 1.5. So they raised it 50 basis points to 1.5%. You look at Eurozone, they're still at zero, but expected this year to start moving off of zero and getting into positive deposit rate territory. You go to the UK, Great British Pound, UK, they're at 1%. Last time they raised rates was May 5th. We go to the Japanese yen. They continue to stay at negative interest rates. The Swiss National Bank, Switzerland, continues to stay at negative interest rates. The dollar and the New Zealand. So New Zealand dollars at 2%. Last time they raised rates was back in April. And the U.S. is still sitting at 0.75 to 1.0 with a rate decision coming up in 2 weeks. June 15th is the next rate decision, and you can see here it is baked in for a 50 basis points rate hike. So 99.9%. No guarantees in this world of financial trading, but 99.9% is a pretty good probability that that will be the rate decision. And 50 basis points expected in June, 50 basis points expected in July, and we're going to see if it plateaus from there. We're going to see if it levels off from there. We're going to see if the Fed stops raising rates for the rest of this year at some point. China came out this week. I had some news. China's reopening, Shanghai reopening, 33 different measures of financial accommodation. I have an email that I saved a picture of. I thought that was pretty interesting to read. So right here, China attempts to revive its virus-hit economy with new stimulus measures. China's cabinet announced 33 fiscal, financial, investment, and industrial measures on Tuesday of this week, so right after Labor Day, to help boost its economy among falling growth expectations. Its package also includes measures to ensure energy and food security and stabilize supply chains. So China is pro-growth. And I'm wondering with that reopening, if that increases demand for oil, OPEC increases output, does that change really oil prices? One thing we talked about this week in the Flex trading room in equities on demand, we looked at U.S. oil. And take a look at this because this is kind of crazy and potentially kind of scary. Um, Talked about this week. Why would oil stay higher? Why would oil go lower? Talked about this on Tuesday during my session. So why would oil stay higher? China reopening, increased demand, supply issues and bottlenecks, shutting down pipelines, global demand, global shortages, Russia invasion still going on, geopolitical tensions. To go green, we have to power everything right now and transition with carbon. Our world is a carbon energy world right now, even though the technology exists. But we can't just quit carbon cold turkey and go green. So that is happening right now. That increase in demand, plus we've got also, I mean, it's crazy, right? 2 years and change from COVID. And I'm not saying COVID is responsible for all this stuff, but it clearly showed the fragility of the global economy and the supply chain and everything else that is wrong right now in the world with inflation, right? And everything else. But why would oil stay higher? Because nothing's being fixed, right? We're not fixing supply and demand right now. We're just throwing oil at the situation and expecting like, oh, that'll drive prices lower. I mean, I never drive my car, and I don't know, it's probably been a month or two since I've had to fill up my gas tank, which is fortunate for most. Filled up last night. It's like $75 to fill up my gas tank. Yeah, that sucks. It's more expensive than usual. Uh, I played golf with a friend last night that his company pays for his, gas in his truck, and he has a giant like dually diesel truck. And he's like, yeah, put $100 of gas in, Monday, $100 gas in on Tuesday, $100 gas in on Wednesday. I'm like, that's insane, you know. But again, not all about that. What I'm saying is this: oil at its highest point was the peak in 2008 at $147. Okay. We have talked about this at length in the Flex trading room and in Equities on Demand. 147 is great, right? Like that's as high as it's ever been. But what is terrifying is what happens if it breaks it. If we break above 147, there is no stopping the trajectory or the price of oil. And this energy crisis that I've been talking about for 6+ months could certainly happen, and we could be experiencing parabolic type prices. So, how do you get people to adopt green technology? Make gas combustion, carbon technology, carbon energy so unaffordable that it's going to force governments to start handing out stimulus credits. Like, we know it's so expensive, so here you go. But we could have parabolic price action above and beyond 150. And that's what's scary because I don't think it's that far to the question. And also, why would it stop right now? At 130, that peak in March, why would it stop right there? Of all the spots. So we go to a monthly time frame. Was this just a flash? Let me get rid of these paragraphs here. So would we just stop there at random and this is like the highest it goes? Look at this monthly chart. It's probably easier to have it without the lines. Let's go to US oil. And let me just log in, make sure everyone's saying hello on YouTube. There we go. No, don't add to the queue, dummy. All right. Good. Yes. Nice to see everybody. What's up, William? Bill, hello. Marilyn, what's happening? Jason, David, Chris, Wayne, Craig, Herbert, nice to see you. Dan, let's see. Denise, nice to see you. Yes? Yes? Okay. All right. Just want to make sure we're live and well on YouTube. All right. And oil. Go to the monthly. Okay. So we had our peak in March. We have our high back in 2008. Now, it could be this situation where maybe this 147 to 150 does, in fact, off of this literally recover from zero. That's what's insane. From zero to all-time highs within a 2-year period. Interesting energy crisis, huh? But like I said, does it stop there and then balance, or does it go parabolic through 150 because nothing is there to stop it? I don't know. Okay. All I do know is that energy is something I'm going to continue to play. You want to see what energy is doing? You can look at simply a sector tracker, go year to date. You can look at, I've got it on TradingView built where I can go all the sectors like XLE, XLRE, all those tickers right here. They'll pop up here in a second with year to date. So this is the sector spider tracker year to date, and you're going to see there's probably 2 sectors that are green. energy and utilities. But look at the discrepancy, the disparity between performance. Energy is not even close performance-wise. Like 59% year to date on XLE, just the ticker XLE, the energy sector. What's it made up of? All these different stocks. Are they up more than 59%? Look at them. Occidental Petroleum Corp up 139%. Marathon Oil Corp up 90%. Qatar Energy up 84%. Halliburton 79%. We've been in a lot of these trades this year. We've been in energy sector. We've been transitioning portfolios to that to start the year. We had a great Q1 because of that. So, is there a reversion to the mean coming? Maybe. But maybe not now. Maybe later. So, crazy stuff, but it's not even close, right? Now, I'll say this. What's been hit the worst? So basically this, what is the best sector to be in? Utilities, energy, materials, which, the XLB is down, but there are material stocks that are doing fine. They're stable. Okay. Financials down 9.4, but they pay decent dividends. They're low volatility. I don't mind parking money in some of the financial plays, some of the bigger banks. But other than that, consumer staples is more consumer defensives. So I've got some Coca-Cola, Keurig Dr. Pepper, Kraft Heinz, ConAgra. We've traded some instruments like that, some stocks like that, but definitely not in technology, definitely not in consumer discretionary. I know the markets were very green yesterday. We had some huge rallies, like I saw OKTA, Netflix, trying to think what else. Facebook had a nicer recovery. Amazon's a recovery with that pending stock split coming in July, I think. But consumer discretionary and technology getting beat up pretty badly. Communication services also beat up pretty badly. But again, the story is energy. And what I see is, sure, we could retest the high at 130, maybe stall there. But we break 130, we're going after 147. That's the all-time high from 2008. We break 147, break 150. There's nothing to stop oil above 150. And that's what's scary, right? But can you make a lot of money? Sure. If you're trading energy stocks. If you're looking at energy stocks, look at this. Go into that sector tracker, go to the energy sector right here, and just look at these companies. All these companies have potential. And if a company's not up 70, 80, 90%, then there's probably an opportunity for some of the other ones to perform pretty well. Chevron up 49%. Okay. Is there more to it? Sure. Could Chevron be up 80, 90, 100% this year? Possibly. Okay, one thing I was looking at yesterday with a friend of mine, APA. This is APA Corp. This is also integrated oil. Okay, this is an energy stock. From the recent lows at $5 all the way up to $47. That's a 9x increase. But what's interesting is look at the price of APA back in 2008. When oil was at $147, APA was also at $147. So is there a catch-up trade because oil right now is trading at 120? So is this still needing to catch up? Do we break this 147? Do we have more in the tank for a stock like this? It's possible. So we're looking at some ways to trade it, And so even though we could have this full-on energy crisis, as a trader, there's still ways to make money. And that's what I'm paying attention to. So that is the stock options, equity side of things. I think this is a big year for energy. Whether it's a good situation or bad situation, traders can exploit this, and that's what traders, investors do. We make money up or down. We try to, right? So we're trying to be where the puck is going to go. Wayne Gretzky quote. All right. Anyway, pre-market is not looking hot today. We're about 15 minutes away from the open. Pre-market for the SPY is down by about $4. If I take a look at futures here for the morning, futures, Dow futures down 0.6%, S&P down 0.88%, NASDAQ futures down 1.28%, gold 1862. I could have swore we were at 1830 something. All right, so gold is down. Silver's hanging in there at 22. Crude oil is up. So look at oil from yesterday, by the way. Oil yesterday, and the news was OPEC. OPEC meetings yesterday. Look at what price did. OPEC said, yeah, we're going to come out and increase production. And look at the candle. So even on bad news, meaning that, we're going to put more oil into the supply chain. We're going to put more oil into the markets. That should help decrease the price of oil, and yet it rallied. So there's, again, when you're seeing things rally on bad news, rally on news that should be helping push the price bearish, and it's not. I think you should be able to see and feel and taste the momentum behind energy right now, right? And again, technically speaking, this could be our high to low. We could be making our way back up to the same high again. We could fail at the same high and then come back down. It is summer, right? I know that oil demand should be higher. China reopening should actually peak, help peak this demand and increase oil again. But the reality is, if we come back up to test the high, okay, and then we actually start looking at inventory levels, maybe this hits resistance and falls back down to support, and we have a 130 to roughly $95 range with some volatility coming ahead on oil this summer, right? But like I said, we break 130, make new highs. 147 is our next target. That's the historical high on oil. We break above that, we're talking parabolic. So don't say we didn't talk about it, because we did. So I'm trying to position a decent chunk of my portfolio into energy. We added a lot of exposure this week. We added some new trades, staggered out some credit spreads out to July, August, and September. And I wish I just had the guts to do a bunch of long calls, but they're not really great prices to do it at. So I don't feel like paying a bunch to take those long calls, although I think that the momentum will continue to go higher. Right? Currency-wise, take a look at things this morning. So dollar, jumps really hard on that non-farm number. Again, it was just jobs. We had a slight miss by 1/10 on unemployment. We had a slight miss, again, compared to forecasts on average hourly earnings. Cad is still firm. Euro's making a nice little run today. Pound is stable. Our weaker currency pairs, we have the Swiss, the New Zealand, the yen, the Aussie. Okay. Volatility-wise, things are fairly contained. We don't have any major outliers. And what I'm interested in looking at here is Cad Yen. I'm probably too early on this trade. We talked about this yesterday in Flex. I put in a pending order. We're going to modify this order going into next week. So we put in an order around, what was our pending order on Flex? I think it was 101.95. Yep, so right here. 101.95 was a pending sell stop order that did not get filled. So we're going to modify this because we're trading right now at 103 and change. And the low from today's candle is 103.06. So I'm going to go ahead and make an adjustment and say, hey, if we get back below 103, we're going to go ahead and sell this. So I'll make that adjustment here. So anybody that's Flex, we will discuss that. So we'll do a 10300, and our stop loss will just be above the recent high. So we'll say around 104 tentatively, and we'll set a sell stop level. We're going to target 199.10, which again, 300 to 400 pips of profit. That looks fine by me. Okay. So also we're going to have some nice pivot alignments. If I go to a 4-hour time frame, we will have a second weekly pivot in a row. So we have this is pretty nuts right here in the Cad Yen. We have 1, 2, 3 daily pivots in a row, which is a lot. This is 4 of 5 daily pivots that have been missed. We have a June monthly pivot and a weekly monthly pivot. That will be a second weekly monthly pivot. So again, all that is this move has been very imbalanced. I'm not saying it can't go higher, but what I'm noticing is we're hitting overbought conditions. I'm looking for this to kind of settle down a little bit, retrace a little bit, rebalance a little bit. I was looking for divergence on a higher time frame. We have it here on the weekly. Okay, so take a look. Let me get rid of this guy. I was messing around with this indicator yesterday. So this is gone. And on a weekly time frame, oops. So we're making a new high on the week, but what I was looking at was here. We're still overbought on the relative strength. I'm looking for some divergence on momentum. So we're making a slightly higher high in price with some hidden bearish divergence. The timing would be interesting to see if it will fall next week. Maybe it will. Okay, so I'm in a little bit early on the Cad Yen, trying to take a small sell trade. I could be totally wrong, and I'm prepared to take another sell trade up here at this high, which is a peak in 2014 at 106. So I've got a pending order at 103. I'm going to start scaling in, looking to scale in, but I'm looking to sell this thing around 106 and try to get some balance on this Cad Yen sooner than later. So that's a currency that I'm watching right now. We've also had several daily candles in a row, which is, again, something that's not really the norm. So last time we had a ton of candles in a row we had pullback, higher high, then some consolidation. So we have another series of candles in a row. So I'm looking to see, do we go up and then start working our way back down to balance, possibly putting in more of a high here. So I'll be watching it. But major resistance coming ahead, 2014 highs at 106. So I'm watching that on the Cad Yen. Okay. Did I take position on the oil close to zero? I did. I was in, I'm trying to think, USO, is UCO one? That sounds familiar. Yeah, so UCO, USO were some of the main ones. And then I started looking at a bunch of energy stocks, which we continue to trade the energy stocks now. So a lot of those prices were great. A lot of the, 2020 was a pretty remarkable year, completely unexpected. It was a rough, February and March when COVID was taking the markets down for a crash cycle. But just having the dry powder and having the courage to buy in that environment was, grounds for an amazing year. So 2020 was a great year. What I didn't do was hang on to all those positions because I was up, triple digits on a lot of stocks. You don't have a lot of buy trades where like I'm up 100%, I'm up 200%. I took a lot of profit, you know. So I mean, had I known we go from 0 to 130 in oil within 2 years, obviously it'd be nice to hold those positions, but I didn't. Okay, Armando said, what about the dollar yen? All right, dollar yen, let's take a look. So dollar yen is trading at 130.49. I don't think really anything changes on the dollar yen. Okay, I think that we have resistance ahead around 131, 131.42 are these recent highs. I could see some consolidation coming this summer, right? So right in here, we have the dollar yen, this crazy, ridiculous blast off for, no big deal, 1,600 pips, and we go high to low, equal high to equal low. We could have some consolidation. Now, this could be a bull flag on a higher time frame. This could also be a point where the market starts breaking back down later. Look, here's the reality. The yen is going to be a difficult counter trend trade. Okay. Do I think that the yen can ultimately balance and find all these pivots and stuff that it's missed? Yes. But do I trust the yen to do the right thing and go down and rebalance right now? Not really. The BOJ is on a crazy mission to maintain inflation at super low levels and weaken the crap out of the currency like they've done for the last decade. And they did it again right after the FOMC in March. So it is not worth fighting the BOJ right now, although I am short on dollar yen and I'm short on, Swiss yen and a couple other pairs. But I have to keep those trade sizes small because I don't know if the plan on the dollar yen is to push as high as it can and start looking left on this chart. And the last, look, we're above this high from 2015. We're above this high from 2007. We're possibly testing this high here, which is back in 02 at 135. So we're trading at 130.52 right now. Are we going to push another 500 pips? It's possible. Are we going to push these historical highs in 98 at 148? It's possible. I don't know. I would like to say it won't. I'd like to say that we have some technical obedience before we just go another 1,800 pips higher, especially after a 1,600 pip move. But the market does what it wants to do. So I'm short on dollar yen. I'm still keeping my trade sizes small. I'm looking for some inside divergence here. I'm looking to see if we have some consolidation. I love the fact that we have a ton of pivots aligned right here. We have some equal high resistance. If we go up and poke those highs and then form a top, that would be an excellent top to see translate on the charts. But I have to see way more proof on this chart that this dollar yen is going to go lower. Okay. So again, it's a wait and see. If you want to be short dollar yen, it is trade small, buckle up, and hope that everything works out on the technical side. Because fundamentally, it's not really cooperative currency pair right now. And that's a little concerning. However, we have seen a decent move against the dollar. Take a look at the dollar index and the DXY. So what I'm looking at still on the dollar index is this: a high, low, lower high, lower low. Gets a 3-wave move off of a 5th wave completion, little Elliott wave stuff. We could also have a high, low, shallow pullback, goes down one more time, pulls back, forms a flat pattern, and then continues and proceeds to go for a new low. So we could have I'll make this a little bit thicker, something like this. A, B, C. but there's some structure inside of that we have to pay attention to. But past resistance becomes future support. But I am expecting a correction to play out on the dollar. So I am long right now, New Zealand dollar. I'm long euro dollar. I'm long pound dollar. And I continue to hold those for right now. Okay, and I'm short dollar yen, but I don't think that's going to help. I'm long dollar Swiss as a hedge, just in case the dollar is going to continue to rally. Okay, DXY, same thing with a little bit more history. High to low, pull back here to the monthly pivot. So are we going to proceed lower? High to low, lower high to lower low. ABC correction. Come back and find this exponential moving average. Past resistance becomes support. Past support gets hit again. Past resistance over here becomes support. Could this be a massive range trade? Sure, maybe. Look at the higher time frame. Here's the weekly chart on the DXY. You know, if the dollar does not go higher, we have resistance there. We have resistance there. We could have resistance here. We're forming tops. So does it come all the way back down to range lows? I don't know. There's arguments to be made, like maybe it does this. Finds a peak and consolidates, right? Maybe we consolidate near these highs, and then it's either more breakout or correction. So there's a lot of wait and see. And really, I mean, if dollar runs into unobstructed levels like breaking highs, that makes me a little bit, I mean, again, if I'm long euro dollar and this thing goes higher, that's not going to be good for my position. You know, that euro dollar is probably likely going to test parity. Okay. I will say this though, if euro dollar tests parity, I'm looking to buy it from there, not sell it. You know, so with the euro dollar down at 103, I wasn't selling it down to parity. I started to buy, looking to take the bigger trade to the upside. Okay. But isn't it the banks that move the market anyway? I mean, sure. But so if that's the market, they do what they want. Do you have a direct line bill to the banks to they'll let you know what they do? No. You know, they play it close to the vest. We never know what they're going to do. You know, and a lot of times they'll drip information out there that is contrarian. You know, when Goldman Sachs says the euro dollar is going to parity and then it goes to 110, that crap happens all the time. Back in 2015, the euro dollar is supposed to go to parity. It went down to 104.50, then went to 125. So don't tell me that banks are, you know, being honest about where prices are going. They do what they want to do, and the market does what it wants to do, right? So anyway, yes, they're forces, but we are retail traders, so we do our best. Okay. Just to let you know, Amazon split will take effect after this weekend. Oh, I didn't know that. I didn't know it was that soon. So that's good. That'll help drive some demand for ZN. So demand is up, but look at this. We've got a $25 to $30 gap lower. $25 gap lower pre-market on Amazon. So today could be a pretty ugly day. You know, futures are dipping pretty hard. Here is the S&P E-mini futures down 41.35 right now. Red on the week and on the day, pulling back from yesterday. So we had a green push yesterday. We could have a, you know, kind of a dark cloud candle or something today, depending on how nasty it gets. Let me see if we tap this weekly pivot. That'd be some recent fresh lows at 40.66. So taking out this week's best rally. You know, yesterday felt so good, but it's 9:30. Wall Street's officially open, so we're going to see what the market's made of today. I always say amateurs open, pros close. If the market has any way to close higher today, that'd be impressive. Highs. So I just want to surround this because we are likely going to be in for some volatility. One thing I said I'd talk about, I nerded out some numbers this week and just manually entered in June, July, August performance from the S&P 500 since 1985 to 2021. Right? We don't know what June, July, August is yet for the S&P. So what I've been calculating, I still need to do some more calculations here, but I just want to see what are we in for this summer. You know, again, I know that this year feels very different. You know, this is kind of a throwback or homage to 2008. Like, hey, we had a great recession. We had a bunch of trouble. We had a nasty sell-off. We've had one of the worst starts since like the 80s. So I wanted to see like, okay, so since 85, what's the market done? June, July, August. And again, you know, true to the nature of the market, it wins more than it loses, right? So we have 64 out of 111 winning months. That's a 57.6% bullish result, okay? 43.4% bearish result. But what I need to do is I'm going to go in, there's 64 items I need to add in here, but I want to see what's the total up percent versus down percent. I do know that the net result should be 40. So the total summer performance since 1985 in the S&P 500 has been around 40%. So that is 30, what? 35 or 36 years of data, and 40% is the total performance, right? So the net results 40%. The 3-month average, which I thought was interesting, the 3-month average is just over a quarter 1%. So most of the time, the best performance in the stock market is not the summer. Most of the time, the summer is pretty quiet. That's why there's a saying, sell in May, go away, come back and trade Q4. Because November to May is the best performing months. That's when we have the most consistency, the most, and again, you have holiday trading, you get through the end of the year, you have low volume drift, Santa Claus rally, all that good stuff. The market gets excited to kick off a new year. But November to May is when the market makes most of its big gains. Summer is fairly quiet, but I have a feeling that this summer might be a little bit more volatile. So that's what I'm watching. I'm still long on some instruments that are volatility related. I'm long on the VIXI. Okay. I'm looking to buy the VIXI again if we hit these lows. This low is around 1530. What is really interesting to me is how we can have these horrible days in the futures market, horrible days in the stock market, and yet the volatility index is not making new highs. Remember, this is illustrating a fear gauge, right? So if I go to the VIX, I mean, correct me if I'm wrong. Did we not make steadily lower lows in the stock market for 7 straight weeks? We definitely did. The S&P 500 was down 7 weeks in a row before we broke that streak. And yet, you look at the volatility index, we did not make higher highs for 7 weeks in a row. We have just maintained and contained this higher volatility. So, I'm interested in still being long volatility. If we pull back to these levels, I want to be long the VIX. I want to be long the VIX. So I'll be long the VIXI. I'll be long the VIXM. I think that's a great play for this year is pick your battles, trade volatility, pick your battles, buy your dips, focus on the right sectors. There's a lot of sector performance this year. There's a lot of stock performance within those sectors. If you want your best winners, I don't think this is a year of dollar cost averaging into tech stocks. I think that's going to be a recipe for disaster. In fact, that's another thing I read this week. Tiger Global Management, massive hedge fund, massive firm, hundreds of billions of dollars under management, and they're down 50% for the year. Because what have they been doing? Dollar cost averaging into tech. Tech sucks. There was a big run yesterday like, oh, OKTA is higher, Chewy's higher. That's great. Some of those stocks I have in my portfolio. Doesn't mean they're going up. Chewy's at 28.64 because they surprised earnings. Great. I hope they keep going. My break even on Chewy is 38. I have some ground to make up. I've got some real crap stocks in my portfolio, but I've also had some great runners that I'm trying to take advantage of and let them keep running. Okay. So, all right, I'll open it up for some requests. You have some charts you want me to take a look at? Any stocks? It's been a pretty light week for us in equities on demand. Notes that we have here. I'm going to try. So I'll talk about this more in class at 10 o'clock. We're going to have a conversation around that coin credit spread. I'm looking to roll it. It might require a $2.50 debit because I'm essentially rolling the entire losing credit spread from the 90 by 85. If we look at it right here, Coinbase is trading at 68.44. I'm still looking to lose the stock at $60 come June 17th, which is 2 weeks out. So next Friday's expiration is the 10th. Following Friday after that is the 17th. I still have a 60 by 55 credit spread that I'm looking to take full profit on. So more than likely, a couple decisions today. Either I roll that credit spread out for like $2.50 and just kick it out there and try to make it up and give it a wash in the next couple of months, which is totally fine. Or I just take the loss and then I use that 60 by 55 to make up for that, and I still hopefully lose the stock in a couple weeks at $60, which would be a good thing because my break even is $48. So I'll still make some money, $12 a share or so on Coinbase if I don't touch it. If price is going higher, then obviously I'll continue to roll this and lower my cost basis and eventually lose the stock. So anyway, we're gonna watch. Let's take a look at the heat map really quickly. Go to here's your heat map. So little mixed bags, healthcare red, Microsoft down, real estate, energy. Make sure this is up to date. Let me refresh this. Uh, Dan, you'd be surprised how it's not really that sophisticated. So, I mean, look, it's transactional levels, right? It's transactional levels. It is volume oriented, and it's you just have deep pockets. You trade and hold. You know, it's way different on a trading floor when you're forex. Forex wise, I mean, there are some traders that are day traders and scalpers, but it's not my style. I gravitated more towards the position trading, more towards willing to hold, willing to give yourself the increase in probabilities. I don't like the pressure of for me as a retail trader, I'm not over leveraging any accounts. I'm just trading to make profit. So, um, anyway, but there's all sorts of stuff, right? You can have contrarian indicators. You can have volume-based indicator. I mean, again, we still have to make decisions. We still have to read the charts. I think that's one thing that we're pretty good at, finding direction. The hard part is trying to eliminate all the noise because now you have chart noise, you have news noise, and trying to figure out what's really going to happen. I think oil is a big story this year. I think energy is a huge story this year. I think that we could be heading towards a massive crisis. Now, I'm not calling that a conspiracy. I'm just saying don't be surprised if we truly have oil at $200 a barrel and it makes the whole world come crippling, puts the whole world on its knees because I feel like a war is going to break out because of that. That's probably not a good thing, you know? I mean, we almost had a war break out when oil was at $40 a barrel, $30 a barrel. Let alone now it's at 150. It's like you think the world will be happy, but it's not because it's making stuff unaffordable. So I don't know. We're just in a mess, right? Like the whole world freaking sucks right now. My comment this week was, is there anything does good news exist anymore? Feels like there's nothing good. So I don't know. Watch comedy. Try to get a laugh in or two because everything else you're reading right now is pretty much a bummer. So trying to be optimistic. All right. Anyway, any charts, any requests before I wrap it up? Take a little breather, and then we have equities on demand at the top of the hour. By the way, if anybody is wanting to join the trading rooms, you will start to see possibly some webinars from market traders. Pulverreport.com. I still run trials for everybody. If you'd like to join me, click on the systems tab. This is my website, pulverreport.com. Go to systems, then go to trading rooms, and there's a flex trading room trial. You can trade Forex with me Tuesday, Wednesday, Thursday, every week. Equities on demand Monday, Tuesday, Wednesday, Thursday, Friday, every day of the week. We trade stocks and options. We trade Forex. We talk about everything. Okay. So it helps. It's been great to trade with the community of traders. Traders have been very successful. And if I didn't do stuff like this, it'd be a lonely game. So again, I love the fact that I have the platforms to do this and can just trade alongside traders like you. All good. So, any questions, any requests? Otherwise, I'll wrap things up, take a little breather, and we'll be back next week, Monday and Friday, for the poll report, 9 o'clock Eastern Time. And I don't know, go see Top Gun. Enjoy the NBA Finals. Surprised that Boston won last night. I fell asleep after the third quarter. I was like, all right, I think Golden State's got this. Nope. Kudos to Boston. They're hanging in tough. They shot great. But anyway, exciting stuff. Stanley Cup, Eastern Conference, Western Conference Finals. So for hockey fans, basketball fans, good stuff. All right. Just trading weekly candles now, trading off the opens. Gotcha. All right. So, like I said, I'm going to be curious where things are at next week. Cad Yen, I'm watching. I'm going to make that adjustment there for Cad Yen for the 103 entry as a stop sell. We'll still go after a decent chunk of profit. I'm watching that 10. Actually, I'm going to make a note here. Major resistance at 106. But the current pivot alignment is strong. So we'll have 2 weeks in a row. We'll have a monthly. We have multiple days in a row. I would suspect that the Cad Yen can come back and balance a little bit, especially if we have a rough day here and there in the stock market. There should be some risk off trading. Those risk off flows will translate hopefully into the JPY. But at the same time, I don't want them to translate into the Swiss franc. So there's just a lot of tough trades going on. It's like I'm Euro Swiss long, Pound Swiss long, but I want to see yen strength. It's like you can't really have your cake and eat it too. The market's going to move with risk on, risk off correlations, and I've done a lot more hedging this year in forex than I typically do. So I don't love it because something wins while something's losing, and I'm taking profits on one hand and I'm managing drawdowns in another. So it just sometimes feels like you're stuck, and I don't like that. But whatever, I'll get through it. That's my problem, not yours. Right? So we'll see how the market fares today. See where the market closes at 4 p.m. Pretty light on the calendar for everything else. Expiration wise, we have I've got Robinhood, International Paper. I'm trying to think what else. Covered calls, Coinbase. I'll probably try to roll that credit spread or just take the loss, not worry about it. Hopefully get the stock called away in the next couple of weeks. What else we have here for some of our notes? We added a bunch of trades this week in equities on demand: HAL, CTRA, FCX, ACI, SLB, FXI. And we closed out Alcoa for a proper profit. 62 by 61 closed it out for a nice profit this week. AA is probably down a little bit. It's at 62.65. Nope, hanging tough. So that credit spread is looking positive for a full 50 cents. But a lot of traders closed out for 25 and 35-cent profit this week, which is good. Okay. All right. Bill's going to see Top Gun tonight. Enjoy it. So, yeah, enjoy it. It's a guilty pleasure. Definitely a throwback movie, but well executed for a 30-plus year hiatus on a sequel. I'd say they executed pretty well. But anyway, enjoy, right? Get some smiles, get some laughs in. See you next week. Monday, be back at 9 o'clock for the YouTube session. And if you're watching on Facebook, Twitch, Twitter, nice to have you here. Say hi. And one more thing before I go, hit that thumbs up button for me. Help support the channel, support the YouTube algorithm, all that good stuff. There you go. Steakhouse Top Gun. Oh, man. What's after that? How can you top that? All right, good stuff. All right, everybody. Thanks a lot for being with me. Have a great weekend. Happy Friday. Equities on Demand students. See you in 20 minutes. And see you next week, everybody. Bye.